All right, let's begin. So first of all, I'd like to go over DXY and maybe EURUSD, which is the only pair I'm trading for now. So I'll go over DXY, then EURUSD, then we can I can open the floor so that we can go ahead and ask or request for any pair you want us to look at together. So this GBPAUD, let's go to DXY, sorry. So on DXY, I like to look at things from the monthly time frame. So if you've been watching my YouTube videos, last month, I think my two previous videos, I talked about a bearish dollar for the first 3 months of this year, right? I also called your attention to the fact that we have this obstacle, this particular support level here to contend with. So if we see January close above this support level, then price may just jump to the upside from there, which my next target will be around the top here as my first target. Then second target would be at 120.368, right? So it depends on how we close for the month of January. Excuse me. So, but for now, price may still blast below here, and there are reasons for that. I have the video on my YouTube channel, so you can go look at the 2 previous weekly videos I did. I think this particular video was the last video for the month of December 2023. So, but if we close January above this current monthly zone, I believe it's going to invalidate that my projection of initial bearish month for the first 3 months of this year, right? So if we close January above here, then I'll be expecting price to continue pushing higher, because this is a solid zone that has been tested multiple times. Here's my marker. So you can see how price has tested this zone around here, and all these zones. You can notice that we're on the monthly time frame, by the way. So you can notice that each time price dropped into this zone, it was difficult for price to actually break below that zone. So if we see a monthly, let's say this particular month of January 2024 closes above this support level here, then I'll be expecting a continuous push to the upside. So this will simply mean we'll see a strong USD across board. All right. Now let's go to the weekly time frame on DXY. So if you look at the weekly time frame, I have this trend line below. Price faked out of that trend line last week, which was the last week for last year. So price faked out, broke below here. But you can see that last week we saw this massive rejection from that monthly support zone. From this monthly support zone. So massive rejection on the weekly time frame. So if we go to the lower time frame, you will see I'm kind of skeptical about how next week is going to play out. I think we have CPI for next week. Let's look at the calendar. I think we have CPI next week. Yeah, on Thursday on USD. So I think this is going to decide what's going to happen for this month, right? It's going to decide if we are going to break below that monthly support zone or we are going to continue going higher, because CPI is one, I think after NFP, CPI is the next big news on the US dollar. I can't even say which is bigger now, whether CPI or NFP, but CPI has massive, it's a very, very volatile news in the market. So if CPI comes out and we are going to continue lower, then I think CPI is going to push price below here. But if CPI pushes price above here, then we have a long, long move to the upside, which means, to me, I would like to say price will most likely be bullish throughout the year. Why? Simply because of this monthly support zone. So if this support zone holds, I'll be expecting price to continue pushing higher. Now let's go to the daily time frame. So on the daily time frame, you can see I have my Fibonacci retracement level from the recent swing high to the recent swing low, and price pushed into that level, exactly the 0.6 fib level, and we saw this massive rejection. Now the confusion here now is the fact that price activated the bullish side and the bearish side. So there's a massive indecision right here in the market. I mean, price found it difficult breaking above the 0.6 fib level, right? Closing with a doji candle for Friday, because we're on the daily time frame. So this was Friday's candle, last Friday's candle. So you see, I'm skeptical right now, because even if you look at this zone, just like price came to retest this zone right here, right? You can see that price has tested this zone here previously and even here. And now what can you observe? 1, 2, 3 candlesticks have found it difficult breaking above that zone. So what does that mean? Are we going to continue falling from that zone? Well, let's go to the 4-hour time frame. Let's go to the 4-hour time frame. So we are going to think in probabilities here. On the 4-hour time frame, I have this trend line here plotted from this first touch, second touch, and then this is the third touch. What do you observe at this third touch? Massive rejection. Yes, we had a fake out here. At this point, when price was even trading above here on the 1-hour time frame, I was thinking, okay, this week, if price closes above this trend line, then I would like to see a strong dollar, at least until we come to the top side here, which is around 104.158. But when NFP came out, we saw this massive rejection, you see, and something like a double top at a zone that has been tested multiple times, looking left, 1, 2, 3, 4. Then the 5th time, look at this massive rejection. Now, I won't even lie to you guys, I'm also confused. So this is what I'll be looking at. I'll be thinking in probabilities. I'll be looking for 2 possible scenarios. Let me just check if we are still together. Okay, we are together. So I'll be looking for 2 possible scenarios. Remember why I like to analyze the DXY is because if we have a bullish DXY, then we'll have a strong dollar across board. I'm just saying this for those that may not understand why I like to analyze DXY before going into the other major pairs, USD pairs, right? So if we have a bullish DXY, then we'll have a strong dollar across the dollar pairs. And if we have a bearish DXY, then we'll be expecting a weak dollar across board. So now I want to trap price within these 2 zones. Now, the way I trade, I like to see price take out this resistance. Maybe something like this. Where's my arrow? Yeah. Maybe something like this. Close above this area. Come back for a retest. Then I want to see a rejection. So that way, I'll be looking for sells on. If this happens, I'll be looking for sells on EURUSD, GBPUSD, and for like USD JPY, I'll be looking for bullish scenarios. Stuffs like USD CHF, I'll be looking for bullish scenario, right? So if price breaks out of this trend line, breaks and close out of this trend line, comes back here for a retest, and I see a solid rejection, maybe around here like this, then I'll be expecting for price to push to this next level, which is above here, which is around the 104 area here. All right, that's my first scenario. Then the second scenario will be for price. If price is committed to continue lower, then I would like to see a break below this zone that has been tested multiple times here and here, right? A break below, a pullback, a solid rejection, then I'll be expecting continuous weakness in that is on DXY. I hope that makes sense. Forget about the fact that price looks like it's creating an inverse head and shoulders pattern here. That's not the first time it's happening. I mean, it happened around here. Inverse head and shoulders. But what did you notice? Price pushed lower, right? It's not a valid inverse head and shoulders pattern until we take out the trend line, the neckline. And why is that the case? It's simply because let's even forget about the concept of head and shoulders pattern. Like I usually tell my students, forget about the concept of head and shoulders, because some people may want to argue they are not retail traders, right? They believe in SMC concepts and stuff like that. Okay, let's forget about this head and shoulders pattern. Let's focus on market structure, right? I think SMC and ICT guys, you call it change of market structure, something like, is it choke or whatever it is called. So let's even focus on that. So should price break out of this zone, which in my own case, should price break out of this zone, we have broken above the neckline. But market structure wise, this will now become our new higher low. Then should price break out of this zone, it will be a new higher high. So if you don't even want to look at it from the perspective of inverse head and shoulders pattern or double top, double bottom, blah, 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 stuffs like that, look at it from the market structure perspective. So should price break out of, in my case, this neckline, right? That is a new higher high created. So which means that is a bullish continuation, right? And if after this pullback, price pushes lower, takes out this zone, that will be a new lower low. And when you see a new lower low, what should you do? You are bearish. You get the point, right? So don't anticipate, just follow price action. Don't anticipate that, okay, this is looking like an inverse head and shoulder, so price will definitely continue higher. Don't do that. All right. If you want to, if you trade on the 15 minutes time frame, then this doesn't matter, right? Because you know that even if there are many times I've taken trades on the 15 minutes time frame that price is going to, let's say price is going to go the opposite way. Let's say price is going to sell, and I bought on the 15 minutes time frame. I will hit my target before price pushes lower. Why is that possible? Simply because I am trading on a much lower time frame. All right. So this doesn't even matter if you're trading on a much lower time frame. I hope that makes sense. So, but long term, DXY, I need to see this zone taken out for a bullish continuation, and I need to see this zone below taken out for a bearish continuation. Now, let's go to EURUSD. So EURUSD, let's first of all see how we closed for the week. We already know how we closed for the previous month. We closed bullish, right? So for the week, which was last week, price closed with this massive bearish rejection here, massive bearish engulfing candle, which indicates massive selling pressure. But you know what? The confusion I have here is, look at this zone. Let me put this line here. Look at that zone. Then look at this. High, higher low, higher high. So right now, we are actually retesting. Now, what's going to happen next? Are we going to continue higher? I don't know, right? Are we going to break below here, right? We need to wait till next week to find out. So why do I have this zone here? If price had closed maybe below here, let's say last week's candlestick closed below here, I'll just confidently say for a fact that price is going to drop. But right now, it looks like price is currently retesting this higher, this previous higher high here, right? Higher high, higher low, higher high. This looks like we are exactly at the retest, right? But if we want to look at candlestick behavior, we close with a massive bearish engulfing candle. So by default, I would like to say price is going to continue lower. So I like to leave that probability idea open. You understand? So that I won't be caught up in my head like, okay, price is definitely going to do this. There are times I know that price is definitely going to do this. But for now, it's 50-50 from my own point of view, right? I don't know how you look at the market, but from my own point of view, it's actually 50-50 right now. So on the daily time frame, I have this trend line below. So for me, should price take out this support zone here, which has been tested multiple times, looking left, right? Even here, price are tested as zone, massive rejection before breaking below it, massive rejection here, massive rejection here. So also this zone, price broke above it, retested it, massive rejection. So should price come here and break below here, I'll know for a fact that price is falling all the way down here, right? But we are not there yet. So as a matter of fact, market structure wise, on this daily time frame, we are still in a bullish trend, right? If you can't see it, we have a high, higher low, higher high, higher low, higher high, higher low, higher high. I know you want to say, okay, price broke below here, but on a bigger picture, this is a higher low. Since we can obviously see this higher high here. So even if we come into this trend line, it will be a higher low for price to push higher, if that's what price intends to do. But if we break below this zone, most definitely I'm expecting price to drop down here. But as it stands now, I'm around my 50-50 zone. But does that mean I'm not going to take any trades? Definitely not. Let's go to the daily time. Before we go to the 4-hour time frame, let's come back to the daily time frame. So you can see how Friday also closed with a dodgy candlestick, long wick below, long wick above. So Monday, Tuesday, Wednesday, price may easily just continue higher or price may continue lower. But let's go to the 4-hour time frame and look at what is happening there. So in last week's analysis, I actually said, should price break below this green zone, then I'll be expecting for price to fall to this zone, which actually happened. But funny enough, last week I couldn't get any trading opportunity. Why? I actually saw some trading opportunity, but based on my mechanical way of entering trades, I couldn't place any trades. Why? Because to go to the 15 minutes time frame, because on prop firms, I execute on the 15 minutes time frame. So I saw two good quality trading opportunities. The first one was here. Price was trading around here when I came to the chart, right? So price was trading around here. It didn't make sense for me to enter at this zone and put my stop loss here, because to me at that point it was too wide, and I never knew that price was definitely going to drop to the downside here. We don't know, right? Even if I would have taken the sell, let's say if I had jumped into the trade around here, I would have taken the sell for a quick 2-to-1. But because I knew that this was my next target, should I even enter the trade? But I didn't know for a fact, right? So because of that, I was like, since I came in around here, I would have loved to see a little bit of retracement before I sell, so that even if I'm taking profit maybe around here, that would be a decent 2-to-1 for me. So because of that, I didn't take the trade, which if I had entered here and put my stop loss here, I would have still gotten my 2-to-1. But like I said, there's no certainty in the market, so you don't know what the market is going to do. Now price pulled back. Then I saw this entry here. I was waiting for the 4-hour candlestick to close, and the 4-hour candlestick closed around here, somewhere around here. So I was like, okay, I would like to see a mini pullback, at least maybe anywhere around here. I would enter my stop loss above here. But that pullback never happened, and price left me behind. So I usually get this question oftentimes that, okay, what if price doesn't pull back into your zone? What do I do? This is where you want to take the guesswork out of your trade. So for me, I like to take the guesswork out of my trade. I don't want to enter immediately, since I would have preferred to see a pullback. I don't want to enter immediately. Then if I get stopped out, I'll be very mad at myself, right? Maybe in future, I'll be able to refine my strategy to make me enter from this point, but I'm not there yet. You know, trading is I'm not going to come here and brag that I know everything. Even though I'm a profitable trader, I'm not going to come here and brag that I know everything. I know for a fact that the price is going to fall here into this zone. No. What I want is what I'm going to focus on. I wanted to see a pullback, then I'll enter. I didn't get a pullback, and I didn't enter. So these were the two quality trades I would have taken. And as you can see, if I'd also jumped into the sell here with my stop loss here, I would have made even more than 2-to-1 to the downside. But like I said, no regrets. I didn't get the pullback. I didn't enter, right? So be it. It's going to eventually play into my hands, hopefully within this week, and I'm going to take the trade, right? But for now, nothing. I didn't take any trade. So these were the two trades I would have loved to take last week that didn't play out, right? But anyways, let's go to the 4-hour time frame. So let's look at what we should be expecting next week. So just like I said on the DXY, price is trapped within these two zones. So maybe on the 15 minutes time frame, I'll take advantage depending on what the 4-hour time frame candlestick pattern gives to me, let's say around Monday or Tuesday, right? But long term, let's say I want to swing this, let's say I want to swing EURUSD, then I would wait for price to take out this area here, which is for a buy scenario. I'll be waiting for price to take out 1.10126, all right, before I start looking for swing trades to the upside. Right, swing trades to the upside. Let's look for targets, maybe into this initial target here, which is 1.12706. Guys, if you are not following what I'm saying, this video is recorded. You can always catch up, okay? So, but for sell trades, I'd like to see price take out this 1.08803 for a confident sell, at least to the downside, with 1.07473 as my first target, and then this as my second target, all right? But in between, I trade on the 15 minutes time frame for prop firms, right? So in between, my strategy is I want to see what the 4-hour gives to me. Then I'll switch to the 15 minutes time frame to look for entries. That's how I trade the 15 minutes time frame for prop firms. All right. So I hope that makes sense. But just for a bigger picture, I'd like to see price take out this area for a buy or take out this area for a sell. All right. Because to me, for now, it looks like we have a double bottom, but we still have this zone that has been tested multiple times looking left. So price could easily jump to this zone and still see a massive rejection to the downside. All right. So that's why I won't be confident maybe buying around here until we actually take out these zones that has been tested multiple times above, or take out these zones that has been tested multiple times below. All right. So I hope that makes sense. So I've been doing all the talking. If you have any question or if you have any pair, I could look at GBPUSD, I could look at gold, but let me know what you want me to look at so that we can quickly look at that and then we continue from there. So just indicate by raising up your hand and then I'll take it from there.
AUD card, sir.
Yes. Okay, AUD card. All right, let's look at AUD card. Those are pairs that really tests me, but let's look at it. AUD card. Let's look at, let's use FXCM. AUD card. Wow, I can see this choppiness here. I usually run away from these types of market, but let's look at the bigger picture so that we can. Okay, on the monthly time frame, we can see that the previous month closed with a bullish candlestick, and we can see that price is bouncing off a previous multiple support levels. I can see one here. In fact, if we go back in time, I could bring this zone into play here. Massive rejection, massive rejection, massive rejection, massive rejection, massive rejection. So 1, 2, 3, 4, 5, right? So you can see solid bullish engulfing candle, bullish. Then so far this month we've been bearish. So I'd like to go with the previous monthly candlestick, which is bullish. Which before that previous monthly candle, we've seen 2 previous bullish months also, which is 1 and 2. So let's see how it closed for last week. Wow. Last week, let's look at this area. Let's look at this area. Let's look at this area. Okay. So I can see this. Let's even bring this further left. So let's even push this further left. You can see this rejection here. So I can see a rejection here, rejection here, rejection here, rejection here. And then why is price stalling around here? That means it is respecting this resistance here. And now we had the previous week, we have this dodgy candlestick. The way I interpret dodgy candlestick is this. Dodgy candlesticks to me is, okay, we have a preceding trend. So in this case, we had a preceding trend, which was bullish, came into this resistance, saw this weakness, which means buyers were taking profits, sellers were getting into the market. So it was like a tug of war, right? So I watch football, right? Or let me say I watch soccer. So this was like a draw match, this dodgy candlestick. Then the next week, we saw this massive bearish engulfing candle, right? So which means last week we closed with a solid bearish engulfing candle. To me, that's a bearish, that's the selling pressure right there. So if I were to trade AUD card, I'll be looking for sells. But let's go to the daily time frame. But on the daily time frame, maybe because of this choppiness, massive choppiness. I mean, we started this choppy move from Tuesday, 21st November 2023. And now this is January. Wow. I'll be skeptical about this market. That's from my own point of view. Why this solid rejection from the bottom here? If you look, it is simply because of this zone also. Massive rejection around here to the downside. Price pushed up, massive rejection from the downside to the top side. Now we drop there, massive rejection again. So you see, to me, I interpret this as conflict of interest. But let's look at the 4-hour time frame. Let's look for zones that we can plot. So on the 4-hour time frame, whether you are trading SMC, ICT, or my own style, market structure wise, I can see series of rejection here. This was a previous support region. What I try to do here is capture this area, this area, this area, and this area, right? And including this area, that was after the break and retest. So this is my zone. Price has broken below it, went for a retest. We created a new lower low, breaking below this recent low here, right? So now price went back for a retest. That's how I'm choosing to look at this. So for next week, it depends. It depends. All right. It depends. If, let's say, the initial parts of, let's say Monday, Tuesday, Wednesday closes with a bearish daily candlestick, then the next day I'll switch to the lower time frames, which is the 1 hour, 30 minutes, 15 minutes time frame, and start looking for sells to the downside. But of course, my initial target will be, that's for the bearish move now, my initial target would be 0.88670. So to me, right now, I would like to see this as a low, a lower high, a lower low, a lower high, then a lower low. That's how I would like to look at this at the moment, because clearly market structure wise, we're in a downtrend. We ranged for a bit, failed to create any significant higher high. Then price had to succumb to the bearish side of things. And now it didn't just succumb to the bearish side of things, it started creating bearish market structure. So to me, even if price, let's say next week price starts shooting higher, but to me, I like to keep things simple. This is how I would look at this. So even if price starts shooting higher, maybe I will change my analysis and start looking for buys. But if I want to keep things simple and go with the flow, this is how I'm going to be looking at this. You understand? Because you want to be a successful trader, you want to take out confusion. That's the first focus you need to have in the market. Take out the confusion, because when you are confused, you won't be able to even make profit, because when you are confused, you start guessing, you start making bad calls, because someone might post on a different Telegram group and be like, oh, I'm buying this, and it's truly making money. So you get confused, right? So because of that, you want to keep things very simple. What is right in front of you? Right now, what is in front of me is this. You understand? So if next week happens, so how I would now convert to, let's say next week, let's say I'm trading this and you now see me buying this. Now, this is what is going to change my perspective. This zone here, this area here, that's what is going to change my perspective. So let's say price continues pushing higher and create a new higher high around here. Then I'm now bullish. I'll wait for a pullback into that zone and start looking for buys with whatever strategy I trade. At this point, it doesn't matter what kind of strategy I trade. I just want to maximize. I know that, okay, now we have a new higher high and price is most likely going to move back into these highs. Then I want to take advantage of this from here to here. So whether I take profit around here or wherever, as long as I make money, that's all that matters, right? So this is the second scenario. But for now, I'm looking at a bearish scenario from this retest to this downside here to keep things simple. But for me to change to a bullish trend, then we need to take out this high, because in that case, we now have a new higher high, right? Breaking above this previous high here. Then I'll wait for a pullback into that region or any pullback and start trading to the upside. But let's go to a much lower time frame. Let's say, okay, price is willing to respect my bearish push to the downside. So let's go like to the 1 hour time frame. You can see after the retest, I'm beginning to see a bearish engulfing candlestick pattern, right? So to me, this is selling pressure here. All right, so I'll be like, okay, price should continue pushing lower. However, I'll be conscious of this zone here, that has been tested multiple times here. So should price take out this zone here, then that will be a solid confirmation that price is going to continue lower. And that green zone is 0.89600. I hope that makes sense, right? So if price takes out this zone, in my case, I'll now consider this a double top, then a break below the neckline. So any pullback, that will be me selling with my stop loss above the green zone to the downside. So for next week, up front, I am bearish on AUD CAD. I am bearish on AUD CAD, but I will be bullish if price takes out 0.90054. That's where I'll become bullish from. But I like to think in probabilities in the market. The price is dynamic. There's no goods in the market. All right. You may be looking for sales and price will be going up. So, but you need to have a contingency plan should price continue going bullish. That's how I look at the market. All right. I'm not rigid. I'm that flexible. So, and you shouldn't be rigid also. So I'll be bullish if price breaks above 0.90054, and I'll be bearish from this zone right now. I'm bearish from this zone. You understand? So I could take a sell and lose the trade. No problem. If price is committed to going bullish, I will still get back my money from the market. You shouldn't be scared to lose in the market. All right. You should go look at this book. What's the name of the author? I've forgotten. But The Best Loser Wins. Just Google it. The Best Loser Wins. That is how I trade the market. The best loser wins. I'm not scared of losing trades, all right? So you lose, but the fact is you have the confidence to execute over and over and over and over again. But of course, you can only do that if you have a solid, strategy, right? You can only do that if you have a solid strategy. So the best loser wins. I don't mind. If I want to sell from here, as long as it aligns with my bearish scenario, I'll sell. If I lose the trade and price creates a new higher high, I start looking for buys. That's simple. No guesswork. Just keep it simple. So I hope I've been able to answer your question.
Yes, sir. Thank you very much, sir.
You're welcome. So indicate by raising up your hand. Let's look at the next pair. We still have about 20 minutes to go. All right. Let me just mute King Javo. Gold Digger. Okay, Gold Digger. I'm just going to allow you speak. Sorry, I'm laughing. Gold Digger, like you dig gold a lot, I guess. I'd like to call you a miner. Just go ahead, unmute yourself, and ask your question. You're welcome. Nice to have you. Yeah, sorry, I forgot to ask something. Sorry, what is your name and where are you joining us from? I should be doing that. I always forget to do that.
Okay, my name is Eze Solomon. I'm joining from Abuja.
Okay. Mr. Eze from Abuja, welcome on board. It's nice to have you.
Yeah, it's actually 3D Sniper as well.
Okay, my guy. I know we spoke yesterday, and I spoke for about 1 hour yesterday on WhatsApp.
Okay, so I did my analysis on GJ and GA. Okay. So I just wanted to also analyze it. Let me compare my analysis to yours. That's all.
Okay, G what?
GBPJPY and GBPAUD.
GBPAUD. I'd like to look at GBPAUD first because there was something I anticipated. Like I even mentioned it, I think 4 weeks ago or 5 weeks ago. I can't remember vividly, but I was just looking at it today and I saw that it has even played out, right? So I think on the daily time frame, I remember calling your attention to I think 5 weeks ago. I can't remember. I think sometimes was in November or early December. I can't remember. But price was still trading above here. And I said, I'm seeing possible head and shoulders pattern play out here. But then price was still trading above here and it was quite choppy at the time. So it didn't make sense to just sell because I don't know, whatever strategy you trade, trade on maybe the 1 minute, 5 minutes, or even probably the 15 minutes. If you trade on the 1 hour, 4 hours and stuff like that, it will be difficult making money in this type of sideways market, right? So I was like, okay, it's not safe to start selling, but I'm thinking price will most likely sell from this zone. And my confirmation will be when after price must have broken below this zone. So as you can see, price has broken below that zone. But first of all, I like to look at how did we close the previous month? Because I usually like to look at the nature of previous monthly candle. Then I'll be able to know that, okay, since there's a presence of either buyers or seller in the market, there's a higher chance that price will at some point within the month trade in that direction. You understand? So now if you look at the monthly time frame, massive bearish engulfing candle. Well, you may want to say, why is this an engulfing candle? I mean, this candle is way, way bigger than November's candle. We're on the monthly time frame, right? So this is November's candle, and this was the December's candle, right? So look at this massive drop to the downside. If you even use your micro eye to look at this, looks like we've created a new lower low. It's not obvious on the monthly time frame. Of course, it's not quite obvious. If we go to a much lower time frame, we will see better from that the lower time frames point of view. But you can see new lower low. And remember, this is just 7th of January today, right? So from my experience in the market, I usually ignore all this. Yeah, I could capitalize on it maybe on the much lower time frame, take the buys and all. But if you understand how candlestick behaviors work, I mean, look at this. When we closed bearish here, we had other bearish movement to the downside. It doesn't always happen like that 100% of the time, because we had another bearish candle here and the subsequent candle was bullish, right? But look at this again. When we had this solid sell-off here, you see more bearish price action until we came into this point here, right? It also happened here, massive bearish engulfing candle. We saw continuous push. Now look at the wick of this candle here. When price was trading around here, around this candle here, of course the color of the candle would have been green like this, making you think price is going to continue bullish. But at some point within that particular month, price came back down, closed bearish, right? The same thing. Okay, let's look at this massive one that happened here. We saw a bearish candlestick here. When the wick of this candle was trading around here, of course, the color of the candle would have been bearish at that particular point in time. You understand? So this also doesn't matter, because right now, as price is trading around here, it's looking like a green candle. But come maybe at the end of the month, this could well become a solid bearish candle, and all this green you see here will now become weak. You understand? But for now, to me, this is just a retest. Remember what I said earlier, I like to keep it simple. I like to focus on what is in front of me. But coming down to the weekly time frame, look at the size of this previous weekly candle here. So it's trying to tell me that, okay, next week we may still push up maybe into this zone if we are going to drop, before that drop happens, right? But look at the size of this bullish candle last week, solid bullish candle. But what can you also notice? We ran back into a resistance. I mean, multiple touches, if you look left. So let's go to the daily time frame. So on the daily time frame, we've now seen the head and shoulders pattern, a new lower low. You remember what I said when I was analyzing DXY? If you don't even look at the market because when people say, I don't believe in head and shoulders pattern, I don't believe in double tops and double bottoms, I don't believe in all those BS, I'm a SMC trader, ICT trader. Yeah, fine. But remember, market structure also plays a role in all these double tops, double bottoms, head and shoulders pattern and stuff. So why are we even arguing? Doesn't make any sense to me. Because, okay, if you don't even want to look at this as a head and shoulders pattern, then look at it as a bearish market structure. No one is forcing you to look at it as a head and shoulders pattern. Look at it as a bearish market structure, right? The left shoulder was created by a new higher high. At this point, we're expecting price to continue higher, but it came here, right, ranged, then created a new lower low. So let's even ignore the head and shoulders pattern. Let's focus on market structure. We have a new lower low. Then what should you be expecting? Of course, bearish movements to the downside. So now back to analyzing this. So my termination point for GBPAUD would be this trend line above here. We have 1, we have 2. So let's even say next week wants to be bullish, and maybe we are going to run into this trend line, right? Then if we run into the trend line, see a massive rejection, then that will be our cue that price is going to fall from that zone. So I hope that makes sense. But now, for now, to keep things simple, the way I'm looking at GBPAUD, I am bearish, right? Maybe until we come into this trend line, I don't know. Maybe until we break above this trend line, I don't know. But let's look for trading opportunities. Let's go to the 4-hour time frame. Now, on the 4-hour time frame, at this zone, you can notice that after that significant break to the downside, and after all this rally to the upside, what can you notice around here? Price is stalling there. That's to tell you that you are not the only one looking at that zone. I'm not the only one looking at that zone. Other traders are looking at that zone also. So we plotted this zone using technical analysis. So why is price stalling around there? It's not because we are any goats. It's because many of us, there's a collective price action happening around that zone. I hope that makes sense. So now why are we stalling here? Why didn't we just continue this rally to the upside? Right? So now I want to look at it from this perspective that even if market manipulators come into the market, then let me make this trend line obvious. Let me make it visible on the lower time frame. Let me make it visible on the lower time frame. Let's go to the 4 hour, or let's even add the minutes time frame. So let's go back to the 4-hour time frame. So we now have the trend line. So even if we want to see manipulators in the markets, then I would like to see them manipulate into this trend line here. All right. I'd like to see them manipulate into this trend line here. So what this is trying to say is, you may be wondering, okay, so which candlestick do I trade? What do I trade? I'm confused. It's simple. Let's say my strategy is telling me to sell here. I will sell. No questions asked. I will sell. If I lose the trade, I'll be waiting to enter again here. Don't be scared to lose. If you are scared to lose, you lose out on losing. I personally believe that those that are scared to lose trades are those that don't have a solid strategy, are those that listens to those gurus online that tells you that, oh no, if you lose a trade, you're a bad trader. You understand? It's funny to me. And I'm sorry, if you still have that kind of mindset, you have a long way to go. So let's say my strategy is telling me, okay, sell from here. I'll sell. I'll put my stop loss above here. Maybe I'll put my take profits around the swing points here. Maybe that's what I'm going to do. And what happens if I get stopped out? Okay, fine and good. I'll be waiting to enter here again. If I lose the trade, okay, no problem. If I take the second loss here, all right, no problem. Okay, I was wrong. Price is committed to going higher. I'll wait for price to take out this zone here, retest it. Then if I see a bullish engulfing candle, I know that I am in the clear to buy. So when you have a solid strategy that you've proven in the market and you've back tested, you won't be scared to lose anymore. You will now be focusing on the long term risk to reward and win rate, right? You'll be looking at, okay, after my back testing and after even forward testing, if you have the patience to do that, okay, what's going to happen? Through my data, you need data, right, to be able to start making confident decisions in the market. So you'll be like, if I lose, maybe through my data, I've discovered that I lose 5 trades and win 5. You have a good trading strategy there, right? Maybe with a solid risk to reward of at least 1 to 2 risk to reward. So what does that mean? You place 10 trades, lost 5, you win 5. You are 5% up if you are risking 1 to 2. Tell me, is that a bad strategy? If you say it's a bad strategy, then I hope you are very, very profitable, because to me, that is a good strategy, right? I place 10 trades, I lose 5, I win 5. I'm up 5%, risking 1%. I'm up 5%. I have a solid strategy. No greed, nothing, just executing each time I see my setup. That's how simple trading is. So yeah, back to the analysis. For now, I am looking at a bearish AUD USD. So my zones are around this yellow zone. If this is yellow, I'm colorblind anyway. So I'm looking for this rejection for a continuation to the downside. And if that continuation happens, I'll be expecting this low to get taken out eventually, because market structure wise, after a previous new high is created or higher high, let's say we're in a bullish trend, then a higher low, the next rally should take out the previous higher high. That's a healthy bullish trending market. So in a healthy bearish trending market, if this is actually a pullback and price is going to continue lower, then I'll be expecting us to take out this swing low. Then my next target will be around these areas here, below here, 3 zones, right? So my next target will be this as my first zone. I could take some profit there if I'm swinging it. Then this as my second target and this as my third target. That's my bearish side of things. So for my bullish side of things, we have to take out this upper trend line here. All right. So let's look at the 4-hour time frame. So for the 4-hour time frame, right, if you want to be conservative like me, then I'll wait for price to take out this area here before I now start selling. All right. If you want to implement a conservative approach, all right, could also look at this. Price rejected, broke below, tested that zone. Why did price retest that zone before dropping? It's because it's a point of interest, and as you can see, when price broke back above that zone, it was stalling above that zone. So maybe if you're trading on a much lower time frame, like 30 minutes, 10 minutes, 5 minutes, 1 minute, if price breaks below this zone, retest that zone. On your smaller time frame, you can take a sell with this zone as your next target. You know, if you go to a much lower time frame, like 15 minutes, 5 minutes, 1 minute, this is a massive gap here. So you could take that sell to this zone. But if price now breaks below this zone, wow, it's a massive drop to the downside. You can now place your sell and go and sleep. You understand? But my termination point, let's say price choose to manipulate above this zone, then my termination point would be at this retest here for another possible sell. Because if you come here and I see a massive rejection, this support is useless to me because I'll be expecting for price. I'll believe that that's a manipulation. Price is going to fall to the downside. But if we break above that trend line, in case you are wondering where the trend line is coming from, let me zoom out my chart. It's coming all the way from the top. Then this is the second point here. So if price breaks above that trend line and above this zone that has been tested twice or 3 times or 4 times or 5 times, 6 times, if I choose to go further left historically, if price take out that trend line, take out that resistance, then I am bullish and I will consider all this move to the downside as a manipulation. So I hope I've been able to answer your question.
Yes, sir.
All right. So sorry, permit me, you requested for 2 pairs, but because we have other people on board, it would be fair for me to take someone else's question.
Yeah, it's fine. It's fine. Thank you very much, sir.
All right. Thank you. So I'll just go ahead and mute you. So I can see Scott's hand up, Victor, Hussein, Kelly. Okay, let me take Hussein's question. It's Spillman, you've been unmuted, so you just need to go ahead, unmute yourself and ask your question.
Good evening, sir. My name is Yusen Spillman. I am from South Africa. I just wanted to know, during NFP, the data was good for the US dollar, but actually the dollar, it for example, gold versus the US dollar, it went down, and after that it went straight up again. What happened there? It's just that the news was good for the dollar. Yeah, so I don't understand.
It was a crazy movement, right? And I wanted to place a pending order because I was actually bearish before the move. But I decided against it. I was like, okay, that is me violating my rule. Because sometimes we all get greedy. But let's look at EURUSD because that was the pair I was looking at the time. So sometimes we all get greedy. There's no one safe from being greedy in the market, but your ability to control your greed in the market is what differentiates you from the rookie traders or the struggling traders or whatever. So when I wanted to place that pending order, because I was going to execute on the 15 minutes time frame, so I was like, okay, I'll just put a pending order then I'm expecting the news to come bearish. But maybe my greed would have still taken the best of me. But before I continue, you already know I am mostly technical trader because I don't know, my brain just find it difficult assimilating news events, right? What is going to do, blah, blah, blah. So I always say, even if I'm going to trade in news, I want a technical entry. So let's say, for instance, before I continue, let me just put this out there. So let's say, for instance, I have a support. Let's say this is support. This is my support. And let's say price was trending, So let's say price was creating lows, lower highs, lower low, lower highs. Then price was looking like this below my support. And then it had given me a retest and it was beginning to push down. Now, I now know that there is a fundamental event coming up. And my entry is telling me sell from here. Before the fundamental event, I would sell with the hopes that when the fundamentals come out, it's just going to take me in profit. And this works like magic for me many times. Many times. Yeah, sometimes I lose the trade. It doesn't matter, right? But as long as my win rate if I trade like this is high, I really don't care, right? I'm willing to take some hits from time to time. But as long as on the long run I'm profitable, I'm fine, right? So I need a technical entry to trade fundamentals. So that's me. And that was what prevented me. That was what restricted me from giving into my greed during that was last week. And why didn't I even take the sell? It was simply because price was at a 4-hour support level. So when the news came out, there was a spike below. Did you notice how it respected the technical level?
Yes,
even though the news was
it.
positive. Yeah, even though the news was positive, which I was expecting it to just crack that support level and continue lower, it didn't happen. So price chose to respect that technical level. And that was my saving grace on that trade. That was my saving grace. Because that zone has been tested multiple times. So to me, participants in the market, maybe fundamentalists can come here and tell me the exact reason why that didn't happen. I'm not even going to come here and act like I know why from the fundamental point of view. But from a technical point of view, I can tell you that for me, the way I choose to interpret this was price just respected this technical level here that has been tested multiple times looking left. And what can you notice? When next news came out, which was the 4 p.m. Nigerian time, anyways, the 4 p.m. news, when it came out, did you notice price was also trading around here? And it also rejected that zone. So what are you now telling me? To me, fundamentals and technicals work hand in hand. Maybe not 100% of the time, but more often than not. So the 4 o'clock, the NFP pushed price from this support to the next resistance. And if the next news that came 1 hour, 30 minutes after that, sent price downward. And that's why we are trapped in this range. Even if we go to DXY, that is why we are trapped in this range. The NFP pushed price lower. The other news pushed price higher. So now we are trapped in this range. So honestly, I won't even lie to you. I don't have, the only explanation I have as to why price acted the way it did was simply because we have support and resistance. That's the way I like to look at it, because NFP respected this trend line above here and this resistance level, sending price downward. And the next news respected this zone and sent price upward. Honestly, I may be right, I may be wrong, but that's my interpretation as to why price acted the way it acted. Right? But I was on Twitter and someone was giving an in-depth explanation that the last NFP, was it the last NFP or the last CPI, the numbers was adjusted. Funny enough, that was the first time I'm even hearing that. I never knew that, okay, after a news release, the numbers can still be adjusted by maybe the board of directors or whoever that are actually in control of the news or data or stuff like that. I don't know that it's possible. But I just saw that on Twitter. That was yesterday. And I don't even know if the person is right or wrong. So I don't want to tell you something that I have actually not verified myself. You understand? But for me, I just stick with the technicals and I use the fundamentals as catalyst.
Okay, now I understand, sir.
All right. Thank you, Mr. Hussein. Okay,
sir,
go ahead.
There's one more thing. If you can just check for me, man. I'm not sure. They're on the NASDAQ US 100. I'm suspecting a double top formation for me. I'm not sure, but if you can just check it for me. But you can mute me now and just go for us through it, please.
Okay. Let's look at it together. NAS100, right?
Yes.
Okay. All right, let's look at it together. Where do I have these lines from? Let me see the monthly time frame. Okay. Let me limit this to the monthly time frame alone so that it doesn't mess up our lower time frame. Let me look at the weekly. Whoa. On the weekly, we have a massive bearish engulfing candle.
Yes.
So you can see that the price is respecting this top here. Price is respecting this top here, and we are seeing that zone. We've seen a massive rejection. So first of all, from the weekly time frame perspective, what I would like to see on NASDAQ is for price to come to this next swing point that has been tested multiple times. I want to keep things simple. This is what I'll be looking for, right? For price to come here before we either come back up here, before coming back down, or continuing higher, right? But NASDAQ is an uptrending index, so I'm not seeing a significant drop, right? So at some point, even after all the pullbacks, it's going to continue higher because NASDAQ, if you squeeze out your chart, go to the monthly time frame, it's an uptrending index, just like the S&P 500, US 30 and stuff. They are all uptrending indices, including gold. Gold is also an uptrending index. It's always all the way up, right? So, considering the way we closed for last week, I'll be expecting a continuous drop on NASDAQ. I may be wrong, I may be right, but that's what I'll be expecting. Then let's go to the daily time frame. Let's see if we have levels of support and resistance. Wow. Now, whenever I see this dodgy candlestick, I'm always worried about it because dodgy candlestick can mean two things to me. The way I trade and what I've observed in the market it mean a point for reversal, or it actually didn't mean anything because the actual definition of a dodgy candlestick is an indecision candlestick. So price can just, after a dodgy price can just continue in the original trend, or it may just go for a pullback or whatever. So spotting this dodgy candlestick pattern now, I am torn in between, right? So let's say if this dodgy candlestick is a reversal candlestick, then I'll be expecting to see price come into the swing point here, which is the 16610 area before we continue maybe lower. All right. But should price continue lower, let's say come Monday, Tuesday, price just kept blasting down, then these areas are my next target. All right, but let's go to the. All right. Remember, during January like this, except you have a strategy that doesn't really care about stuff like this, right? Because through my years of experience in this market, I've always noticed that there's 1,000 ways to. My strategy is not the best in the market. Your strategy is not the best in the market. We have different strategies in the market. So that's where people always get it wrong. They always be like, oh, this is the best strategy. There's no best strategy. The best strategy is the strategy that makes you money. All right. So now, except you have a strategy that you can take advantage of whatever price does. Market structure wise is how I'm going to do my analysis. So I'll look at this zone as a possible reversal point. The price want to continue lower. All right. So,
okay.
Sorry, let me take water, please. All right. So, this will be my reversal points. If price continue maybe for the early part of next week, let's say price continues higher, then this will be where I'll be expecting for price to stall before we push lower into maybe around the 160 to 1.58 area. All right. But the strategy I use to trap this zone, let's say price fails to continue higher, is I usually go to a much lower time frame. And then I'll look for an area of maybe support, maybe something like this. All right. So to me, if price breaks below this zone, gives it a retest, and I see maybe bearish engulfing candlestick, I'll take the trade. But on the higher time frame, which is like 4-hour time frame, I'm actually going to like to see price pull up. Let me go back there. I'd like to see price pull up back into the top zone here, then before we gather momentum. Because if you look at it, throughout last week, it went for this impulsive move to the downside. And if there's one thing I know price for, is price cannot just be impulsive without stalling, maybe move sideways or pull back before continuing in the direction it wants to go into. So this is a massive impulsive move. So I don't think it would be difficult for us to just continue non-stop. It's possible, but in most cases, price will not just continue like that. So this may be our time to stall, maybe pull back into these areas that has been tested multiple times, so that we can gather that momentum to either fall into this downside, or even if it doesn't fall into this downside, at least you want to see a rejection, take advantage of price. Even if you are taking profits around here, that's if you're entering on a much lower time frame. It doesn't matter, as long as you make money. It doesn't matter whether price came to your final destination or not. I don't care about all of that. You understand? The only time frame I hold trades to come into my zone is the lower time frames, like 30 minutes, 15 minutes time frame. But when I'm on the 4-hour time frame, the daily time frame, I usually don't hold till the ultimate level is achieved. So I'll be securing profit along the way, moving my stops, and if price comes back there to stop me out, okay, so be it. But if I'm trading on the 15 minutes time frame, it's enough for me to capitalize on a pullback from here, a quick 2-to-1, 3-to-1, depending on what's comfortable for me at the time. Then I'll just capitalize on that, take my profits. So even if price fails to come into the zone, I don't care anymore. So I hope that makes sense.
Oh, yes, sir. Thank you very much.
You're welcome, Mr. Hussein.
Okay, thanks.
My time is fast spent. So I'll just take one more question, please, and then we'll call it a night. All right. So, goodness, I'm torn. So who do I pick now? Just forgive me. I'll just pick the top of the list. I'll take Scott's question. Please forgive me if I didn't choose you. So, Scott, you've been allowed to speak. You can just unmute yourself and ask your question. But first of all, let's know you from, and then we'll take it from there.
My name is Scott, speaking from Abuja. Okay, sir.
Oh, we have a lot of Abuja people in the house. Nice to have you on board.
And you too, sir. Thanks. So please, if you can analyze on gold, because I've already done my own analysis. So I just want to know whether if I'm correct or not.
Okay, let's look at gold. Gold right now, I won't even lie to you. I'm kind of confused because I would have said for a fact, because I think some couple of months ago, gold and the other USD pairs were aligned with each other, like they're trading in the same direction. But for the past few months, I think I started observing from, I think, November or October, something like that. I started noticing that, what am I doing? So I started observing that gold is beginning to have a mind of its own. So, but let's look at it. there's nothing too big to analyze, right? So one thing I know for a fact is gold on the monthly time frame, like you already know, I believe, is trading at a strong resistance zone, right? Historically, this is the all-time high. I mean, going by the data on our trading view, I was not born in the 1970s or 1950s or 1840s, so I didn't know whether gold traded around 4K. I don't know. But with the data I have, right, gold, this is the all-time high I know on gold right now, and it's trading around 2074. All right, 2074. That's where gold is trading at the moment. And that level is a strong resistance level. So it worries me a lot. Now, if we look at the macro analysis, of course, gold is up. Gold is bullish. And if you want to go by market structure, what you should be looking for is the bullish side of things. But are we going to eventually go bullish? We can only confirm that when we eventually maybe have a monthly candlestick close above the 2074 area. That's when we can say for a fact that gold is committed to pushing higher. But let's look at the weekly time frame. So on the weekly time frame, if you even just look at the bigger picture, price is in a range, right? But that doesn't mean on the lower time frames we can't get opportunities to trade. But just like I like to simplify things, if we look at the daily time frame, the weekly time frame, price closed last week with a bearish engulfing candle. To me, this is a bearish engulfing candle because the body of this candle engulfed the previous candle, right? Closing below the previous weekly candle. And this is not just happening anywhere. This is happening at strong resistance. So do we just ignore that? We can't, right? So what I'd like to do here, for me to be like, okay, gold is going to fall, definitely. For me to be like, okay, gold is going to fall long term, even if the long term is just the next 1 month or next 2 months, is if we see a monthly bearish candlestick close at this zone. That's number one. Then on this weekly time frame that I'm looking at right now, for me to confidently, remember I usually use the word confidently. It doesn't mean if I'm trading gold, I won't be trading within these zones. But I could be taking hits, I could be making profits. But those types of trade that is going to give me absolute confidence has to happen under 2016. I'm talking about the bearish trade, right? Has to happen under 2016. Why? Price has rejected this zone previously. So even if price is dropping from this zone, because the overall current market movement is bullish, right? The bigger picture is bullish. Price may just come into this zone, tap in and continue higher. So you want to think in probabilities. You don't just want to jump into the trade and relax, right? So if you're taking trades in between this zone, at least you're still safe, right? But the bigger picture is bullish and you don't want to ignore that fact. But for me to be confident in selling gold, then price has to break, let's say weekly candlestick has to break and close below 2016. And for that to happen, then we probably need to see another weekly candlestick or the next 2 weeks candlestick close below here. And if that happens, we are already approaching the end of the month. So which means there's a higher chance that we are going to close the month with a solid bearish price action, which will be represented on our chart as a solid bearish monthly candlestick at a solid resistance level, right? So all those are what put together to be able to know that, okay, this is what price is going to do. So, but in the meantime, with the way we closed the last week, bearish engulfing candlestick at a solid all-time resistance level, then guys, next week I'll be looking for bearish. I could be wrong, but that's what I'll be looking for. So on the daily time frame, I remembered last week my analysis was like, I'd like to see price drop into this zone. And because of the fact that this zone has been tested multiple times, even if this one broke above it, but historically it has been tested multiple times, I'll be expecting a bounce. Well, the bounce happened, but it was not significant. So my analysis on gold last week was not really solid, right? It didn't really play out the way I'd love to play out. But we're still around here. massive dodgy candlestick, sell, buys, activated. So now, next week, from the daily perspective, I would like to see a daily candlestick close below here. I'm talking about the way I trade. I don't know your style, but for me, I'd like to see a daily bearish candlestick close below here for me to start selling, right? So if a daily bearish candlestick closes below this zone that I plotted on the daily time frame, it closes below it, then the next day I'll know that, okay, I'll go to the lower time frames and start looking for bearish opportunities until we come into the 2006 area. You understand? Because remember, like I said, on the bigger picture, we are still bullish. So you still need to look for swing points where price may tap into and just continue bullish. You don't just want to get carried away that, oh, we're at a resistance, price is going to fall. I'm talking about how I look at the market. So I don't want to be all that confident that, okay, we're at a resistance, we are selling, price is just going to keep falling. No, we are still bullish. We are still in a bullish trend. We need to bear that in mind. So if we are selling, let's be mindful of the next swing points where price will most likely drop into and most likely just bounce off from and start going bullish. So you want to be careful. But I'm saying for next week, because of how we closed last week, I am bearish. And if see, for me to confirm that bearish, I'm not just going to start selling inside here because price may just bounce off from here and start pushing higher. But for me to be bearish next week, I want to see a daily candlestick close below this green zone here. So if I see a daily bearish candlestick close below there, then I'll go to a much lower time, look for zones to pull back into and short from. You understand? However, if I see a daily bullish candlestick close around above here, then I'll go to a much lower time frames, plot a zone, wait for price to come into that zone, respect it, then I'll buy back into the 2074 area, which is this line I have here.
Okay.
You understand?
Okay.
So that's my mindset looking at gold going into next week.
Okay. Thank you.
You're welcome, Mr. Scott. Nice having every one of you here. I appreciate you for turning up to this live stream session. There's nothing else I'd rather talk about than talking about Forex all day. That's why I'm boring to always sound boring to most of my friends. I enjoy talking about Forex. So when I'm on this live stream, sometimes I even maybe feel reluctant coming on the live stream. Maybe I'm feeling lazy, feeling tired from the day's activity. But when I come here and start talking about the market, it's just like there's this fire that puts me up. I just enjoy it and get carried away. I'm also thankful that you audience also enjoy listening to me blab, rants, or say my nonsense all for as long as I'm online. I just want to thank you for your continuous support, and hopefully this year is our greatest year ever. And if you made it to the end of the live stream, I really, really appreciate you. The live stream is recorded, and the recorded version is being uploaded on YouTube so that other people can also listen to what we talked about. All right. For those that didn't take your question, I'm sorry, because if I'm to continue taking the questions, this is going to be a very, very lengthy video. Right, so please forgive me. I can see 1, 2, 3. I can see 1, 2, 3, 4 hands raised. I'm going to commit this to memory, and the next time we have our live stream, you'll be the first people. Like, if your hands are up, you'll be the first guys I'm going to unmute speak. So please forgive me. Once again, thanks for staying to the end of this session, and hopefully I'll see you in the next one. Have a nice night. Have a nice afternoon. Have a nice evening, everyone. Bye.
Goodbye.